It's the big budget day, and thanks for tuning into the Trade Setup with me, Niraj Shah. I hope this helps you make some important decisions out of the budget. At the outset, I'd like to say, if you are a short-term trader, it's okay to sit out today because a lot can happen between now and the next 5 hours. Having said that, global markets are looking okay. US markets actually had a day in the green. The Dow futures are flat, but decent day in the green, particularly for the Nasdaq. Even the S&P was okay. So keep in mind, European markets too were in the green. So that is one thing. China may be off because the data from China has not looked that great. The rest of the Asian pack, not bad. And the implied open, very important today, marginally higher. Remember, yesterday was a day of recovery. The indices may have ended flattish or maybe marginally lower, but mid caps and small caps did well. Nifty did well too. We're building on from their recovery, so pretty good going. The trade setup for today, and I was surprised yesterday because I didn't think that there's a case for an upside. I still don't think that there is a material case for an upside unless the budget changes it. But what could happen today, viewers? A quiet pre-budget trading session and a choppy post-budget trading session, which is the very likely template today. And why do I say choppy? Because some announcements made or not made will have an impact on those sectors. So please be careful if you're trading this. Having anchored the budget day for nearly 16 years now, I can safely tell you that a lot of people get it wrong even after the announcements have been made. So please be careful if you're trading the budget day today. It usually turns out to be a bad trade unless you are on the right side of the game or the right side of the trade from the very beginning. Now, markets probably still are a sell on rise market versus a buy the dips market, at least as of now. The only caveat here, if there's a very sharp dip, mutual funds are sitting on a cash pile of over 1 lakh crores. This is something that I said yesterday too. And therefore, that buying at lower levels might make it a very swift dip and buy. Whether the dip happens or no, nobody knows. The oil pullback and oil prices have come off, by the way. If you see global oil prices, they've really come back because the market is looking post-Biden at the kind of economic weakness. And the oil pullback definitely tempers the upstream enthusiasm. The likes of ONGC, Oil India have had a really good move. It probably still is a great game, but for now, they will mirror the oil prices pullback, and therefore I won't be surprised if there are dips out there on the upstream oil, but it augurs very well for OMCs. Sorry, just go to the previous plate. It augurs very well for the oil marketing companies. So watch out for BP, HP, IOC. The only caveat I leave here is that MRPL numbers were very wobbly and it may impact some of the refining businesses of the OMCs, so don't know what will happen today, but otherwise OMCs could be a good bet. The last piece on trade setup today is that yesterday you saw the PSE index being up 1.83%. The return of PSUs may not necessarily be an indication of policy continuity in the budget. Don't be a braveheart and therefore think that let me go out and trade because the markets have gone up yesterday on the PSE side. Therefore, the markets know something. Let me trade it because something will come in the budget. Something may come, but it's a blind bet that you're making right now. If you're comfortable making a blind bet, sure. Otherwise, please be careful. Okay, let's move on to specific stocks. Not a very long list today, by the way, but let's showcase nevertheless. MRPL, like I said, I do a quarter-on-quarter comparison because of oil prices fluctuations and the refining margins fluctuations. And quarter-on-quarter, MRPL didn't look good. Revenues were down 6.5%, PAT was down 94% because margins really cracked. EBITDA margins was down 60 basis points at 2.59% versus 9.19%. Suffice to say, this stock may well react negatively today. You might also see stocks like Chennai Petro react negatively today on the back of this. So watch out for MRPL. Watch out for Suzlon, very strong set of numbers. Revenues up 50%, ahead of or almost in line with Bloomberg estimates on that base. But EBITDA, 78% uptick at 367 crores. The estimate was 239. EBITDA margin 18.2 versus estimates of 11.2 and actual numbers of 15.3. And the PAT up 200% at 302 crores. The estimates were 243 crores. Very likely Suzlon could have a good day in trade today. So watch out for Suzlon. Greenlam could be iffy because revenues were okay in line with estimates. Margins came off. EBITDA margin at 10.6 versus 12.5. The estimate was 13.5. As a result of which the PAT number down 40% at 20 crores. The estimate was 34 crores. Very likely Greenlam could have an iffy morning today. Federal Bank could have a good morning today because RBI has approved the appointment of KV Subramaniam as MD CEO for 3 years. Who is he? He was the joint MD of Kotak Bank. Now, remember viewers, Actually, the stock that will react will be Federal and not Kotak Bank here. But keep in mind, Federal, this news was spoken about quite a bit, as a result of which you've seen a bit of a rally in Federal as well. But this may well show a green tick today, so watch out for Federal Bank. Gensol, interesting announcement, preferred bidder for 116 megawatt solar project with EPC revenue of 600 crores in Gujarat. Let's see if this has a reaction. It has been marred by some adverse news flows about 6 months ago, isn't able to get out of that. Let's wait and watch if this one reacts. Don't particularly have a view here. Power Mech though could react. Uttarakhand government has revised the tender offer for a hospital construction company to 594 crores. I think the number was much lower than that. Let's see if Power Mech has a bit of a reaction today. Watch out for Poonawalla. I thought the con call transcript was very strong for Poonawalla FinCorp. The numbers were good too, by the way. The stock didn't react too much, those numbers. But look at the guidance. They've guided for 30 to 35% AUM growth and 35 to 40% CAGR growth over the next 5 years. In fact, they are aiming for an AUM to be 5 to 6 times within the next 5-6 years, which is very strong commentary. And they're saying that from the third year onwards, PAT growth will mirror the AUM growth. This is strong commentary, viewers. Like I said, the stock didn't react at all to those good numbers, maybe with reason, but the commentary is very strong. Let's see if the stock reacts today. So if it reacts, you should know why it's reacting. It's because of the con call. By the way, the commentary from Oberoi Realty too was very, very strong. So keep that in mind. A lot of lease assets will go live by the end of the year. It opens up the commercial REIT portfolio for Oberoi Realty in a meaningful way. Watch out for Oberoi. It did react well yesterday. Exide could be in focus today. Citi's come out with a note on Exide. They've maintained a buy rating. They've raised the target price to 630 from 560. They say that the FY25 to 27 earnings estimates have been increased by Citi, by the way, by 2 to 10%. And they've raised the target PE for the core business from 22 times from 20 times, because they say that the stronger demand growth is expected based on the prevailing trends. Let's see. If Exide reacts, you should know why. I really doubt there'll be a major reaction, but do watch out for this one as well in the session today. Just a couple of others. Cyient DLM could be in focus because on the revenue front, they were in line. Margins slightly better. Bottom line numbers slightly better than what was estimated. And they've guided to a stronger quarter 2. And they have said that they'll do 2 or 3 acquisitions as well. So watch out for Cyient DLM. Could be interesting stock to monitor in the session today. Just very quickly, what will the markets watch out for in the budget? Because a lot of you are going to be thinking what to watch out for in the budget, right? We'll go through this very quickly. Will the fiscal deficit glide path be maintained? Because if it is maintained and if the government shows an intent to maintain the fiscal deficit at 5.1 or 5, it emphasizes focus on macro stability, shows unwavering commitment to fiscal prudence, which may help ratings. I think this is an important one. I think the expectation is that they will probably go down to even 5% as opposed to 5.1. So watch out for this one. Watch out for any announcements of extra outlays to rural housing and MSMEs, because this shows the job creation focus, as well as these are sectors with strong needs for extra outlays. So that's to be watched out for. Will the government do something to attract global manufacturers to set up shop in India in a meaningful way? In addition to that, so therefore, import tariffs becomes a very important thing. In addition to that, will there be PLI schemes for mid-tech job-intensive sectors? Toys, textiles, auto components. I think that is something that the street will keenly watch out for. So these are a few things that you should keep in mind when you're looking at the markets and the budget. Capex intensity, aid to member states, job creation focus, most importantly, the fiscal glide path. Do they come down to 5.1 and 5 as guided in the interim budget? 5.1, what was guided? Can they beat it because of the extra dividend from the Reserve Bank of India? Is the key question. Thanks so much for tuning into the Trade Setup today.